Hey everyone, welcome back to Corporate Decoder, the place where we unpack the confusing language of Wall Street to reveal the real story behind the numbers. In today's video, we are diving into a filing from BioNexus Gene Lab Corp, and it looks like they are gearing up for some interesting moves. Before we get too deep, if you like your corporate news straight up, no chaser, hit that subscribe button, and for even more exclusive content and to chat with us about these filings, join our Discord community linked in the description below. Alright, let's jump right in. BioNexus Gene Lab Corp has just filed a Form 8K report, which is essentially a filing for significant events that shareholders should know about. In this case, the big news is about a new agreement they've inked to potentially raise a substantial amount of money. This filing tells us that on the 7th of November, BioNexus entered into an equity distribution agreement with Maxim Group LLC. Think of Maxim Group as a sales agent. Through this deal, BioNexus can sell its shares of common stock up to a whopping $20 million. This is often referred to as an at-the-market offering program. What does at-the-market mean for us? It means they can sell their shares on the stock market, the Nasdaq capital market to be specific. Whenever they think the price is right, they can sell directly at the current market price, or at prices close to it, or even at prices they negotiate. The crucial part here is that BioNexus is not forced to sell any shares, and Maxim Group is not obligated to buy them. This agreement only kicks in if their registration statement is approved by the US Securities and Exchange Commission and they file the necessary documents. This is a common way for companies, especially smaller ones, to raise capital without the immediate pressure of a traditional big sell-off. The company's main traded security is its common stock, which trades on the Nasdaq stock market under the ticker symbol BGLC. So if you're looking at this company's stock, that's the symbol you'll want to watch. It is interesting to note they are classified as an emerging growth company, which usually means they have less than $1 billion in annual gross revenue and are more nimble, but also potentially facing more risks in the market. The filing also mentions that their shares of common stock no par value are registered for trading on the Nasdaq Stock Market LLC under the symbol. BGLC seeing this confirms that their equity is publicly traded and subject to the rules and regulations of the stock exchange and the CAC. Following this agreement, on the 10th of November, BioNexus put out a press release to announce this. It is worth noting that information shared in this press release is considered furnished and not filed. With the CC, this means it is for informative purposes and doesn't carry the same legal weight as the core filings. Think of it as their official announcement to the public about setting up this money-raising mechanism. Now, while this filing doesn't contain extensive financial tables, the core story is about their strategy to potentially raise capital. In a nutshell, they have established a way to sell up to $20 million worth of their stock if conditions are favorable. This points towards a company that is looking to fund its operations, future growth, or perhaps research and development. For smaller companies, having access to capital through such at-the-market programs is a vital part of their financial toolkit. It allows them flexibility without immediately diluting existing shareholders too much or taking on debt. The fact that they are setting this up suggests they are anticipating a need for funds, and they are doing it in a way that allows them to tap into the market when it's most advantageous to them. This is a proactive step, and investors should keenly watch if and when they start utilizing this program, as it will directly impact their share count and potentially the stock price. Looking at the broader picture, BioNexus Gene Lab Corp is in the biotechnology space. Companies in this sector often require significant capital for research, clinical trials, and scaling up production. Establishing an equity distribution agreement like this is a common strategy for biotech firms that need to manage their cash burn while pursuing long-term development. It is a double-edged sword though. While it provides flexibility, each sale of stock will increase the total number of shares outstanding, potentially diluting the ownership percentage of existing shareholders, which can put downward pressure on the stock price. However, if the funds are used effectively to advance their pipeline and achieve key milestones, the long-term value creation could outweigh the dilution. So, what is our take on this? BioNexus is showing a clear strategy to maintain financial agility. They are preparing for potential funding needs by setting up this at-the-market program. The key for them moving forward will be smart execution, ensuring any stock sales are timed well, and that the capital raised is strategically deployed to drive growth and innovation. The risk here is always about market timing and effective use of the raised funds. If they can navigate these challenges, this agreement could be a stepping stone to significant future developments for the company. Alright, that is our breakdown of BioNexus Gene Lab Corp's latest filing. What is your take on this move? Does it signal strength or caution for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.